Welcome to Propertica. Today we are going to discuss about REITs, Real Estate Investment Trust. So this is one of the new concept evolving in India, and this is also one of the investment avenue with respect to the property investment. So the objective of this is there are some customers are asking me about the real estate commercial investment. So for those customers, and they are small investors, and they don't want to invest on crores of rupees, which usually commercial properties are higher. So I'm trying to help them by putting this video, and they are small investors, and there is an option available. So that is what I'm trying to put in this video. In secrets, I'm going to discuss about real estate investment trust in India. So this is primarily, they invest in commercial real estate, and there are some industrial real estate also, especially for tech parks, commercial office space, and malls, and hotels, resorts. These are all the primary area of the real estate investment trust will invest fund in. So this is the idea behind this, and I'm going to discuss that in detail. So the target audience are property investors who are, interested in investing in commercial real estate. So, and there are some tenants who have plan of a future investments. So this is also one of the investment avenue. So the first one is, what is real estate investment trust? So this is in India, it is a evolving concept. It come from Western countries, from US. And the main idea of this is, investors' money, this will be collected through the IPO. So it is, there are different types of real estate investment trusts are available. For example, mortgage REITs, retail REITs. There are different real estate trusts also available. I am going to discuss here mainly for a equity-based real estate trust. So this is the only one in India which is regulated by SEBI. So this has some certain standards has to be followed. So the SEBI is the regulator for this kind of an investment. So that is why I am discussing here. Other ones are slightly unorganized and not a proper regulatory is following such activities. So this is under SEBI, it is regulated. So this 80-20 is any investor money, the REIT has to be invested 80% of money in income generating commercial projects. For example, tech park, commercial office spaces, some leading commercial spaces where MNCs will be rented for their office space. So mainly the projects are completed and revenue generating projects. And that is the project that investor money of 80% has to be invested. The remaining 20% is a plot which is going to develop in a period of 5 years or 3 years, are a very good appreciation potential, nearby good new projects coming, the good commercial project space available, so that 20% can be invested on that area. So this is the main objective of this investor money, the REIT supposed to be invested. And the SEBI and NSE, BSE is the exchanges, where SEBI is a regulatory, NSE, BSE is the exchange, where the IPO will be released as like other stocks in the stock market. So there is a disclaimer here. This is, the information I am putting for the idea to collect that, about real estate investment trust in India. There is no hard and fast rule that you have to follow these things. These are giving information for knowledge reasons. So please take whichever the comfortable, and if you're not comfortable, you can ignore it. So there is a disclaimer here because there are SEBI and stock market related things are subject to market risk. So if economy goes down, it will come down. If economy up, and it will go up. So if you ask me whether I invested in this, I have a very good knowledge about stock market. I did, intraday trading, and of course I did long-term stocks purchasing and selling. And but I have not invested much on this REIT thing, which is evolving concept in India. It is not very well mature, but there are some small investors can look for this option. There's nothing wrong in that. For example, recovery from recession. So this is the time where the commercial property requirements will be more. So you should look for this kind of an time to invest in these real estate investment trust stocks. I'll tell you what stock is that in the next coming points. So there is a stocks available for this trust in NSE BSE exchanges. So I'll share that. So before that, I'm just sharing some fundamental idea about this real estate investment trust. So this is one thing, you should look for an investment avenue. So what is this INVITS? This is also like real estate investment trust, infrastructure investment trust. There are, 3 stocks available in NSE BSE for infrastructure related investments. For example, metro train and roads, power grids, which will help, for improving the infrastructure in India. So these are exclusively for that. That fund, according to SEBI, they should not invest in any other sector. For example, auto sector. And an investment in infrastructure trust money supposed to be put in infrastructure projects, not auto sector or pharma sector or in other capital goods. There are a lot of things on that in stock market. They should not invest in such areas. And next one is the mutual fund. How does this differs from real estate investment trust in infrastructure investment trust? How does that differs from mutual fund? So mutual fund is something like a fund manager will maintain our funds, investor fund, and invest in certain stocks. For example, HDFC, ICICI, and there are some specific stocks which fund manager selects, saying that this is the stock supposed to be increased, probability of going higher in this short term or long term. The fund manager which decides the stock. So that is mainly the difference between mutual fund and the other investment trust. So there the investment trust is specific area only, but fund manager in mutual fund can select any other stocks which is comfortable for this mutual fund units. So that is the idea behind the mutual fund and the investment trust. Next is global concept. As I said, the REIT is something like a global concept. It evolved from the US 1960 onwards. So US has a lot of skyscrapers, the lot of commercial buildings like World Trade Center, and New York has a lot of skyscrapers. So they need this kind of a concept, which is really help them to regulator maintained managed properties in US. So that is the concept is evolved from the US in 1960, and current market capitalization of the REIT in US is 1.3 trillion, which is a huge amount of market cap, and it is currently trading 225 stocks in New York Stock Exchange. So this is the number of stocks currently in US, which is trading under the name of Real Estate Investment Trust in US. In India, it's come this in 2014 as an IPO and released, some companies, these REIT stocks. There are only 3 companies in India: Mindspace and Brookfield and Embassy Office Space. So these 3 companies are issuing stocks under REIT. So these three things are 3 stocks are available currently trading in BSE and NSE in India. So this is also one investment. It is a portfolio diversification. So it's not that all the money put in one place. For example, any stocks. So whoever have extra fund can diversify the fund into this also. So this is also one option, and ownership here is in terms of shareholders. See, it is not like something like other property you go and register in your name and retain in your name. It's not like that. This is, we can only hold by the shares. So since it's linked with SEBI and NSE, BSE stock exchanges, so it can be only done in shareholders way only. And this is, you can enter into this even with a small amount of investment. You don't need a crores of rupees minimum, and in a small place and a medium place, you need some 2 crores of rupees in commercial to invest. So here you don't have that much money, you don't need to have that much money to invest in commercial real estate. So you should look for a trend, which is upcoming trend, and you should invest it. See, currently example now, stock market is on a peak. So we should not invest at this point of time, so that your profit or appreciation or the share prices very limited chance to go up. This is a market linked investment, so it should be careful when we invest, and you should look for some recession recovery. So that is the time you should start look for an investment, where particularly it is very the demand, is the demand coming to the commercial office space in future. That is the time we should invest here. Suppose if you are already saturated and no office space, lot of vacant space, for example, Corona time. See, majority of the offices are vacating and they are pushing to work from home. So that is the time we should not invest in these kind of stocks. And after Corona and people are calling back and office space demand picking up, yes, we can go ahead and invest it. So you should do some careful study and see the stocks performance, and we should select it. And these properties are managed already by these trusts. So individual investor, no need to manage or any legal verification is required. Nothing is required here. So the complete control under these real estate investment companies. So they are the person who is the manager and managing these properties, and all legal verifications, they only do it. And what is the investor will get from this investment? See, these real estate investment trust guys will prepare profit and loss and balance sheet as per the SEBI rules. And from the net profit, 90% of the income should go to the investor as a dividend. So this is the SEBI rule these companies supposed to be followed. And this gives net income somewhere between 6 to 10% after deducting all the taxes. Investor will get a return subject to the market risks, approximately 6 to 10% in a good, decent economic conditions. Exception, I'm not considering the Corona time or some recession time, just telling standard when economy is normal and running smoothly, and that is the time I am calculating this 6 to 10% per annum. As a dividend, we will get it. And on top of that, of course, if your price is appreciated, share price, you can get that. And these dividends are, some companies are issuing every 6 months. Some companies are issuing this dividend annually. So, and these dividends are taxable. There are 2 categories in this taxable liability. If you are short-term capital gain, if you get this dividend less than a year, or if you are exceeding 1 year, holding the stock for 1 year, then you are selling it. This is called a long-term capital gain. So if you are selling within 1 year, that whatever the income you get it will be considered as a short-term capital gain, and you will be charged 15% on the income. This will be considered as short-term capital gain. And long-term capital gain, 10%. So the next 6th point is, who are all the persons who is going to occupy these office spaces? Mainly these companies will target for MNCs, who are the IT companies or any other leading MNCs, like car manufacturers. Other MNCs are the preference. There is no residential unit like our apartment flat rental, not like that. The customers are mainly MNC customers, and the leases are long term. And the property owned by these companies will occupancy rate always between 85 to 90%, so that they can generate high return on the rental properties, particularly for commercial space. And the management fee, see, these companies also act as a property managers. So the management fee on the tenants, they charge 3.5% as management fee, and 0.5% distribution. They have certain overheads on fund distribution. On that perspective, they charge 0.5%. So totally approximately around 4%, which will be taken and shown in the balance sheet. And after deducting this one only, the net income being calculated, from that the dividend being distributed across the investors. And the risks in these stocks are, commercial real estate is not very well organized in India, since it is not like as good as US. There are some black money and some poor transparency and expansion between. Suppose if you are very good in Bangalore and you want to expand in Tier 2 cities like Pune and Nagpur, or in other metro cities, slightly challenge is there. It is not that if you are comfortable Bangalore, you can go and do the same kind of business in Kolkata. So there are difficulties and market conditions, political, pressure, and easy managing those things, getting the deals, knowing the people there. So the expansion it is not as good as if you are comfortable in one place, another place also will be the same. It is not like that. So we have to be careful on these area before investing in such stocks. Watch the data on this area also to make an informed decision. And these companies are targeting the cities. First one is the metro cities, Tier 1, and the Tier 2 also they are concentrating, Pune and other cities, Nagpur, Lucknow. So there are some investments they are doing in Tier 2 cities also. And number 10 is easy exit. Suppose if you are deciding you want to exit from this, so it's not like a property you have to find another buyer and selling that to another person. Since it's not that kind of ownership, your stocks will be digital stocks in ICICI, Demat account, or any other company like Angel One or HDFC. There are portals where Demat account, wherever you have in the Demat account, you can sell it a digital stocks and to another purchaser. So this is how you can exit from these stocks. So this is gives you overall idea about the real estate investment trust in India. So I want to just to share this, and I have not invested much on this, but I want to share this idea to whoever interested in this area investments. So that is the reason I have put this video. I hope this will help to take decisions on real estate investment trust. So this is our core services, which is we do property management for NRI properties in South Bangalore, and we have some expansion plan. We will do that shortly. And this is our vision mission. Mainly we do real estate activities and helping many of the remote owners who want to manage their properties in South Bangalore. So this is our service catalog. It is self-explanatory. I have given most of the data, which you easily can understand. We got some calls from few customers saying that what service you do it, you share it. So that's why I added this slide here. It is self-explanatory. More details, you can call us and we'll share the details. So this is the book I am writing, and this is mainly for remote users who want to how to invest in Indian properties, and gives the complete end-to-end idea how to invest in India. So that is what I am writing, and you will be releasing this soon. So hope this help you to understand the overall idea. And if you like it, please give thumbs up and subscribe our channel and click the bell button. Thank you for watching. Thank you.